All right, all right. How we doing, everybody? Welcome back to Real Estate Bites. Shooting today from the office. This is episode number 44, and you know what? I still get super nervous before I do this. So here we are again. Thank you guys for coming and joining me weekly. I appreciate you showing up and watching the program. I appreciate you sharing it with friends and family. The audience continues to grow every week, which tells me that you're enjoying at least most of what I'm putting out here. We come every Friday at noon here on Facebook, X, and LinkedIn, bringing you information, try to inform you, try to entertain you a bit, and try to give you some insight into the industry. And with that said, we will jump over to our meme of the week, which is all about adding some insight into the industry. And here we go, old Will Smith. When you're ghosted by another prospect you thought you had clicked with. And you know what? It's funny because this emotion, it happens early on. By the time you realize you've been ghosted, you're kind of over it. Because I'll tell you, there's nothing worse in the life of a sales consultant than not knowing, right? Not knowing what's going on, not knowing the decision that you've made. Okay. Like I would rather hear, Jonathan, we think you suck and you have no shot at getting our business than not hearing nothing at all. There's just nothing worse than not knowing because you don't know if you're still in the game. You don't know if they got the message. You don't know if you're going to do business. And it's maddening. It really is. So please, if we're doing business and it ain't working, don't hesitate to pick up the phone and say, hey, man, this just ain't it. I'm going to move on because it's still going to hurt, but it doesn't hurt as much as not having a clue whether or not I'm still in the game with you. All right. So that's this week's meme of the week. Right on. So now we will jump into the meat and potatoes of what I wanted to talk about today. And that is how crypto will indeed take over the industry in some way, shape, or form. Take over is a strong euphemism. But it will have a tremendous impact and it will change the way real estate is looked at, invested in, bought and sold. I'm gonna show you a little something here in a minute that'll open that window a little bit. And now, this is not a new discussion topic for me. I've talked about this before. I have shown websites before, and I'm going to do the same thing today, but it's been a while since I've talked about it, and the audience has grown considerably. And so I thought it was worth bringing up again. So I want to start with the question of when. I've said this before, crypto is going to have this giant impact on real estate. And I've been talking about it longer than I've been doing real estate bites. So it's been well over a year I've been discussing how crypto and blockchain specifically is going to have an impact on this industry. And the question as to when are we going to see that? I think really the answer lies in the changing of the guard, the changing of a generational guard. Okay. So you're already seeing how crypto is having a tremendously disruptive impact on markets, on the banking system, and even real estate overseas. But here in the United States, with the largest economy in the world, with a deeply entrenched traditional and legacy banking and market system, you're not going to see it until those folks who are as deeply entrenched in the traditional system as they are right now have literally passed away. Okay. The boomers who got the most money in this country and who are the most deeply invested in traditional markets and banking, well, they're going to be the ones that once they have gone, once they've passed on, and they are now leaving whatever legacy they have to their children and their grandchildren and those generations, that is when you're really going to start seeing things change. I mean, the boomers, ask your grandpa to install an app on his iPhone and see how long it takes before he asks you to do it for him because he don't want to figure it out. And it's the same here. Crypto is a brand new, it's a brand new innovation. It's a brand new industry, and they don't want to mess with it yet. Now, us Gen Xers, we have literally witnessed the transition from an analog society to a digital society. And so a lot of us, are a little resistant to that change. A lot of us are very receptive to that change because we have seen in and worked in both worlds. Now, our kids, certainly my kids have never known anything but high speed internet. And they've never known anything but the ability to stream high definition movies right on a phone. And so it's Gen Xers, it's millennials, and then the Gen Zers, right, that are going to usher in this change where we are going to see not just real estate, but markets in general and the way information is handled move over to crypto. And so when I'm talking about crypto, it's really underlying blockchain technology, but a lot of information is going to be stored on blockchain. But the way you're going to see markets change is it's going to happen with crypto. So let me take you over to an article that I looked at recently that discusses this, and we'll dig into this a little deeper. All right. So here it is from ozarksfirst.com. Now this is out of Missouri, and they're talking about this new platform called BitStake, who won the best new real estate platform of 2024. No, we're not even midway through 2024, and they're calling this the best new real estate platform of 2024. So BitStake must be doing something amazing to have earned that title already. But nevertheless, this whole article really comes off like a sales pitch, talking about unparalleled growth, demonstrated expertise and knowledge, blah, blah, blah. An interesting thing in this article is that as you read through it, they do not mention crypto. That word doesn't show up once. And I understand why, because crypto is almost a taboo word when you're talking about it being anything trustworthy. The Sam Bankman-Fried and FTX and that whole explosion and the volatility of crypto markets has really scared people. And so they don't use that word in here at all. They talk about fractional investing. Okay. And this is something that I've talked about before, right? So let's go over to the website and take a look at this. Okay. So we're going to share this one. Here's the BitStake website, your gateway to real estate ownership. Okay. Now you got to get started and open an account to really dig into this. And I'm not going to do that because I'm not interested, but what I wanted to show you in the article that didn't say crypto once at all, talking about this new platform on how you can invest in real estate on a fractional basis. I want to take you to this tab right here, tokenization, which just goes to show you and prove this is indeed all about crypto, right? So you can buy and or sell here. You can put an amount. You can use crypto here, US dollars, all payments. They say, please select the currency. That when I clicked on this before, it had actually had the ability to get, here it is, your Ethereum wallet, to connect your Ethereum wallet to this. Okay. So this is another, and this is not the first one. I've shown other platforms where you can invest in real estate. I looked here, I wanted to go see at their homepage, I wanted to see the properties that they have. It shows nothing. When I go to select a location, it's in Victoria, Australia. Okay, whatever. I have shown other. I've shown other platforms where you can sell, buy, and invest in, buy or sell real estate. My whole point in this, in saying that crypto is going to take over real estate, is this tokenization aspect. So you have investors who are buying properties and then they are tokenizing shares of it, right? So to make the math easy, they're going to buy a property for $100,000, and then they're going to make every dollar value of that property one token. So there will be 100,000 tokens that they're going to sell on these marketplaces, on these platforms. And you can buy any amount of those tokens that you want. And so if you buy 10 of those tokens, you own $10 worth, or $10 out of the $100,000 that property is worth. The investment piece comes into buying a certain amount of tokens. these properties get rented out, and then you receive a portion of that rent based upon the percentage of tokens or ownership that you have in that property. As values appreciate and or depreciate in value, that will also have an effect on the value of your tokens that you hold. Now, what is going to make this very interesting is that you're going to have the ability to, in these marketplaces, buy tokens for one property, trade them, um, give them away, sometimes even outside of the platform. You'll be able to give your tokens to other people. You could trade it for real-time stuff. Hey, you're selling a car. I want to buy that car off you. Well, you know what? I have $15,000 worth of tokens in this real estate platform. If you're open to it, I will send to your digital wallet these $15,000 worth of tokens. I'll take title to that vehicle. Now you have tokens that you can go sell, right? Or hold on to as an investment in this property on this specific platform. When we look into the future, here's how crypto is going to take over or have a tremendous impact in this industry. At some point in the future, tokenization is going to happen not just on these small platforms like this. It's going to happen to your own property. It's going to happen in the stock market, where instead of having to buy a share of Apple, right? Or let's say you wanted to buy one share of the SPY or the index that the S&P 500 is traded on, right? Well, that's trading like one of those, which is like $520, right? One share of the SPY is about $520. Well, if you don't have that much money, or don't want to put that much money towards one share, you'll be able to purchase a fraction of the SPY. These big markets like the SPY, they'll be the last ones to make this conversion. But trust me, it will happen in the future when people are taking their money out of these markets and putting them into new markets where they don't have to commit $500, $1,000 at one time. They can commit $50 and buy that same sort of thing. Then they're going to have to make the transition and compete. There will be a day and time where you can have your home appraised and bring it to a marketplace. And instead of going through a traditional bank for a home equity line of credit or a home equity loan and having to pay high closing costs and origination fees and things like this, you're going to be able to take your equity to a marketplace, tokenize the value of your home, and then essentially loan out or use that collateral for a loan instead of, say, a HELOC. In this marketplace, private lenders will be able to bid or compete with lower interest rates for your equity, right? So instead of going to your bank and having, a central bank sort of dictate the interest rates that you're going to pay on your home equity line of credit or your home equity loan, a number of private lenders will be able to say, no, you don't have to pay 8.5%. I will give you this loan for 4%, and then they will take the equity in your home as collateral by way of token, depending upon the size of the loan that you want. And you'll pay on that over time. And if you default, well, they'll own a portion of your home, put a lien on it, maybe force you to foreclose so they can liquidate the property, that kind of thing. That's the kind of stuff that's going to happen in marketplaces with crypto and with blockchain technology. Another way that blockchain is going to affect it's going to affect the real estate industry is it's only a matter of time before all of the deed transactions, deed transfers, all of the information that title companies go for when they do an exam, all the mortgages that are put on a property, all that stuff is going to be put on the blockchain technology because that information will be incorruptible. If you don't understand what blockchain is, here's a very brief summary. And I'm not a guru. I have been studying this very loosely now for a few years. But basically, instead of having all the data on one computer in one central location, you have it on 100 or 1,000 computers in different locations. And why that's important and impactful is it makes it very difficult to corrupt and or hack that information. If all the information is on one computer, all a hacker needs to do is get into that one computer, and now you hold the hostage, the owner of that information. If it's on 1,000 computers, it's almost impossible, if not impossible, for a hacker to hack into 1,000 computers at once. So this is happening around the world. I know that there are African countries who are slowly but surely putting all of their educational records onto blockchain. Think of the implication there. If you want your transcripts, you log in, you can pull all your transcripts. You don't have to send away some snail mail application or an online application and wait for the university to gather the information and mail it back to you. And it takes weeks and it costs money. No, you'll be able to do this stuff instantly and pull your information. There's always going to be a cost to it, but the convenience of it, the speed of it is going to be significantly and tremendously different. So a lot of trading is going to happen in these crypto marketplaces. Real life equities, real tangible assets such as your home, even your vehicles, will be able to be tokenized and then lent out. We are moving quickly towards a cashless society. There's been a lot of talk about the Federal Reserve having a central bank digital currency that moves from a cash society to a strictly cashless or crypto society. These things are happening, folks. None of what I'm saying here is financial advice, but it is worth your time to dive into this a little bit and take a look at, because these are not fads. This is not a fad. The whole world of computing is moving onto blockchain slowly but surely. And the quicker, the more time goes by, the faster it's moving. And economics around the world, currencies around the world are moving from hard money that you can hold in your hand to digital currencies. And that's going to be how governments operate around the world, specifically third world Western civilization, where you have the central bank control, you have a very large embedded banking system, not third world, first world, my apologies. In third world nations, you may still have, barter and trade. You may be trading goat skins for, your money or next week's meals, whatever it might be. But here in places like the US, Europe, China, most of South America, North America, they're moving towards a cashless society and a crypto central bank sort of system. So it is worthwhile to look into this and pay attention and understand this, because there will be opportunity for first adopters. I think Bitcoin's here to stay. All the other coins out there, there's a million. There are literally tens of thousands of coins out there now. 99% of them are garbage. They're junk. They're going to go away. They're worthless. Don't put your money into them. But there's a handful of them, the big ones like Ethereum and Cardano, Solana. These are smart contract platforms. They provide a service versus Bitcoin being a digital currency or store of value, and there's going to be a battle for those smart contract platforms to see who takes supremacy. It will be on those smart contract platforms that central bank digital currencies, that Bitstake, that these other platforms are built on those smart contract platforms. That's where these trading, the trading, the buying and the selling, the investing with crypto is going to happen on those platforms. So learn about it, guys. This is the future. Try to stay ahead of it. Look for opportunity in it. And, God bless you. I hope you make the best of it. All right. That is it for the meat and potatoes of today. Look, if you want to have a discussion about that further, I'd love to. Leave comments. Let's talk about it. Share this with people who may be interested. If you've got friends or family who are savvy with computer stuff, who may be programmers, maybe engineers and computer engineers, share this stuff with them. Maybe they can help you find opportunity. And, if you don't want to commit your money into a situation that is, causes you to be a landlord or something like that, this might be a solution for investment purposes that allows you to legitimately leave the management and the landlording to someone else and just be a passive income investor. Okay, let's take a look at this past week's real estate statistics. So, you guys who watched last week know that I was out and I pre-recorded that episode, so I didn't do this last week, but I did record last week's statistics. The only one I couldn't get a read on from the MLS was the current, all of the active listings last Friday. So if you don't know, I pull all of these statistics from the MLS. I look at Lorain County specifically. I've been toying with the idea of expanding my search to the entire MLS that I'm a part of. The numbers will jump and get bigger, they'll scale, but I think a lot of these things are going to remain the same, like median home values and square foot values, average days on market, but these numbers, current inventory, sales, they will jump significantly. Let me know if you guys would like to see a greater geography that I look into versus just Lorain County. I've been using Lorain County as the sample size for basically the Midwest. And what I see here has been relatively true. I started, considering this because I know Lorain County's performance is a little bit better than Cuyahoga County's has. Cuyahoga County is seeing more contracts fall out of favor. Cuyahoga County is seeing more time spent on the market than Lorain County. Lorain County is continuing to grow. Cuyahoga County, not so much. Summit County, not so much. So there is some slight differences, but in generally what I see is the same. So I'll quit blathering and we'll get into this here. What we got going on here. So this morning there were 355 active listings, 355 homes and condos for sale in the entirety of Lorain County. Last week, there were 83 closings. The median square foot of those closings, 1,760 square foot per home. $265,000 was the median home value of those sold last week. $158.39 was the median square foot value. So this is the metric that I have been paying attention to or decided to pay attention to versus list price to sale price ratio to determine whether or not we are appreciating in real time. So we looked at it at the end of the first quarter, and here it was $143.85. That was a reduction from the fourth quarter of 2023. That was our average median square foot value at the end of 2023, $148.32. At the end of Q1 2024, it had dropped $5. And as you can see since then, it really dipped the week after, but we have performed pretty much week after week. It's gotten a little bit better. And I would say in the, 9 weeks since Q1 ended, that average square foot value is definitely better than what we saw at the end of Q1. And I would say even better than what we saw at the end of Q4 2024. So it looks like at least through 2 quarters, home values are appreciating. We opened sales last week, an average time on the market of 26 days. Again, Lorain County is still smoking hot. It's an inventory thing because even when we see these interest rates creeping up here above 7%, we're selling 83 sales last week, average 26 days on the market. That includes the time spent under the contingency phase of the sale. So these houses went under contract and then went through their contingency phase before it's considered off the market. The interest rate this morning was at 7.29% for a conventional 30-year note. If you looked at an FHA note this morning, that was a 30-year FHA is at 6.82%. So, not quite half a point, but almost over 40 basis points in difference if you wanted to go FHA versus conventional. And that is a significant difference in your monthly payment. Okay, so the big sale last week was in Redtail, $660,000. And let's take a look at that beauty. So here we have it, 660, 4-bed, 3.5 bath. This 3,600 square feet is misleading. It's 2,700 square feet finished above ground. And then there was 900 finished square feet below ground that it should not be included in living space. It should not be included in this number. The reason that it is because our MLS asks for finished square feet above and below ground, and Realtor, Zillow, etc. They add that. They aggregate those numbers that we put in our MLS, and they advertise it as square feet on a 1/4 acre lot. Let's take a look at this beauty. We've seen this design style numerous times on this program. Just a big, beautiful colonial. This is, when was this? Does it say when it's built here? Built in 99. I'm certain everything's original in here. You can tell from the oak finishes, which kind of fell out of favor in the 2010s. So they may have done a window replacement since 99 and replaced the trim around it and whatnot. But oak railings and whatnot, that's all original. Big, beautiful kitchen. I love the ability to see the fireplace from the kitchen. And then that's back to back into the living room. $660,000 in Redtail. I was actually kind of surprised that it was listed this low. And I was not surprised to see that it only spent a few days on the market before it went directly to pending. It went directly through the contingency phase and into pending. All right. That's it for this week. Once again, thank you guys for joining me. As always, take care of yourselves. Take care of one another. I love you, people. We'll see you next week.